Certainly zero on marketing, right? Like it was less than $1 million until we had the first version of our app. We were issuing the first credit cards. We had a team. This was unheard of, really. Like, in the world, for somebody to grow a financial services business with very little, negligible, zero customer acquisition cost. So I told David many times, I was like, we got to be prepared to make big marketing investments because people, they hate banks. They hate credit cards. But what we realized was people were just ready for an alternative. Like customers had nowhere to go. But that type of relationship in which customers are almost like held hostages to your services because they don't have an alternative, they don't end well, right? The first real option that will show up, they're going to jump.
Welcome to The Peel, where we explore the world's greatest startup stories. I'm your host, Turner Novak, founder of Nan Capital, the venture capital firm that doesn't hold their customers hostage. Today, I'm excited to bring you my conversation with Cristina Junqueira, the co-founder of Nubank, the largest neobank in Latin America and the world, with more than 80 million customers across Brazil, Colombia, and Mexico. Chris started Nubank in Brazil in 2013, along with co-founders David and Edward, essentially creating the Fintech category in LatAm by introducing a no-fee credit card and mobile app to a market that was held hostage by incumbents. From humble beginnings in a small house in Sao Paulo to being backed by investors like Sequoia, Founders Fund, DST, TCV, Tiger Global, and Warren Buffett, to then going public in December of 2021, which incidentally made Chris Brazil's second self-made female billionaire. We'll talk about the reasons Nubank was able to spend $0 on marketing throughout most of its history, why it took 6 months to wire its seed round from the US into Brazil, how Nubank thinks about its brand, navigating a near-death experience in the early days, why they waited so long to launch new products and markets, and what happened when the very first transaction on a Nubank card failed to go through, which we actually found and stitched in a video of. This was an incredible conversation, starting with a crash course on the fintech market in Latin America and taking us through every step of the journey, building and scaling the company into and after the IPO. A quick disclosure, I do not own any shares of Nubank at the time of publication, but I may at some point in the future. Nothing discussed in this episode is investment advice, and you should do your own research before investing in any companies mentioned. Thank you, Chris. Let's start the conversation. Chris, how's it going?
Pretty well, and you?
I'm doing amazing. I'm excited to learn about fintech in LatAm and story of Nubank. Getting started, can you give us sort of a crash course on fintech in LatAm? I know you kind of created the category almost. So just kind of give us a deep dive on everything that's going on and get us up to speed.
Sure, absolutely. And first, thanks for having me here. So here at Nubank, we operate currently at Brazil, Mexico, and Colombia, which are three of the largest economies in Latin America. They represent actually over 60% of Latin's GDP and population. So those are very large countries if you think about the size of the region. And financial services historically has been a huge industry across Latin. I think it's over $1 trillion market cap, but it has also been extremely concentrated within very few companies. Like every country in Latin America that you would pick, you would find that financial services industry is concentrating like 4, 5 players, maybe 6 here and there. But it's definitely not a competitive, or it wasn't a very competitive market, right? Which led to customers being underserved. Like the reality is that the banks, like the financial institutions, they never really had to compete. They never really had to be better, and to compete for customers.
Why was that?
Customers didn't have much of a choice. They were like, well, if I'm being mistreated by this financial institution, or if their products are underbanked, like where should it go? Because it was kind of the same. Products were all commoditized, and there wasn't much of a differentiation. At the same time, margins were really high because, again, customers had nowhere else to go. And then we came in, right? So this was about 10 years ago. We started a company and we launched the next year. And when we began, it was unthinkable. It was like this industry was a little bit of a sacred cow because you kind of saw technology disrupting many other industries, entertainment, hospitality, transportation, but financial services. To your point, like you mentioned that we kind of invented a category. Like when we started, the word fintech was not used. Like it wasn't a thing, But when we tried to explain what we were trying to do in Brazil, like 10 years ago, people were like, so it's like a bank, but with no branches. They didn't have a frame of reference to even think about the categories. Once we launched and once we started getting traction, people kind of, realized, wait, like, there's something here, like these guys, they're on to something. So maybe, we can also do something. So what we saw on these 10 years is that the fintech space has really boomed in Latin America. Like I think we now have over 1,000 fintech companies in Brazil alone and over 500 of them in Mexico. We also saw a lot of inflow of capital into the region. Nubank was the first investment for a lot of funds that led our rounds like through the years. So if you think about Sequoia, if you think about Founders Fund, TCV, DST, like all those guys, they had never, like, we had to educate them on the opportunity in Latin America, what Brazil was about, like what consumers saw, like, So there was a lot that changed over these past 10 years. But it was really a market that was really ripe for disruption because, again, few incumbent players, heavily concentrated, poor customer experience, fat margins, in a population that was young, very connected. The Brazil and Mexico are really high in terms of the ranks of like social media usage and connectivity and smartphone adoption, right? So all those things kind of made this viable at this moment.
And I've heard you say before that you think specifically fintech in LatAm is like the biggest opportunity in the world when you just think through like the margin potential, revenue potential, size of the population. That's insane. Why is it the biggest in the world?
Yeah, I mean, people can look at the problem in different ways, but the way that we think about this is not only, to my previous point, is it already a pretty large market and a region that is very populated. Like there's a lot, like we're talking about hundreds of millions of people, in an industry that is already like pretty valuable, but also the penetration of banking services, of financial services in general, is very low. Brazil is probably ahead of the curve, like when you compare it to everyone else in Latin America. But let me give you some references. So when you look at paying credit card penetration here in Brazil, we're talking about 40% of the adult population. In Mexico, that's 11%. So it's much less.
Do you know what we're at in the US, maybe just as a frame of reference for people?
So in the US, I think it's the penetration is higher than Brazil. I don't know, maybe 50, 60%. But Brazil is pretty ahead of the curve when we compare to everyone else. And still, there's an unbanked population, like people that don't have access to financial services, but there's also a lot of people that are underbanked, right? So they have some access, but not to like good or competent products. Take Brazil, which is in Latin America, like the most advanced country, right? As far as financial services go. We've launched, it's recent, it's early, but we've launched insurance products here in Brazil. Our first insurance product has sold few hundred thousands of policies like very early on. And over 80% of the people that bought it had never had an insurance product before. So we're really talking about expanding the pie, Mexico, for instance. We are now north of 3 million customers for credit cards in Mexico. About half of those had never had a credit card before. So we're really talking about not only taking market share of a highly profitable, highly valuable industry, but also growing the size of the market in the region as we expand access to those products and services.
Yeah. And when you talk about expanding access, like if you want to buy a car, typically in the US, you get a loan. If you want to buy a house, you have a loan of some kind. And if you don't have access to that, you can't own a car. You can't get to work. Like you can't have a family maybe if you don't own a home. So it really, giving someone access to credit, as long as it's done responsibly, can be a pretty big unlock for somebody's quality of living, in my opinion.
No, for sure. It can be very transformational. You're talking about access to goods and to consumption. But if you think about even entrepreneurship, Latin America is a region where many people are self-employed, they're autonomous workers, and a lot of them have no access to credit whatsoever. Colombia, I believe, is the market in Latin America that has the highest percentage of people that are self-employed. It's over 50% of the population. Yeah, I think it's about 54% of the population. The fact that those people might have, even if those are tiny lines, but they can use for working capital lines, that can help kick off like lots of like small businesses that can grow and employ other people and generate other, work on consumption opportunities and help the economies also turn and grow. So it can be very transformational. The lack of access, the lack of reliable and frankly, like financially efficient savings mechanisms for its population to do better in terms of access to homes, in terms of aging, in terms of how well they can retire. So there are so many second and third order implications for these economies. It's something that we're very excited about.
Maybe we'll get into a little bit more about how you evolved the product roadmap and the suite of offerings that you have over time. But yeah, it's just start with a nice, easy to use product that leads into my next question that consumers enjoyed. I heard you say something that consumers don't like banks. Do you know why? Like, why do they hate banks?
Yeah, that is even a little bit of an understatement. I usually say that they aren't liked anywhere, but they're especially hated, in Latin America. Yeah, when we first started this, if you were to Google, like, I hate banks, like, there would be, pages and pages of hatred. They've improved. Let me tell you that. Like, for sure, I think the rise of competition, frankly, customers being for the first time, like, even aware of different possibilities and of options, of having options, I think has really transformed how the industry thinks about this. But I think it's a combination of many decades of extremely expensive products and service being pushed through them through not great sales practices. I used to work for an incumbent bank. I worked for them for 5 years. And I tried to do a lot of change, to drive a lot of change from within. It failed miserably. Well, but, I mean, I'm glad I did, right? Otherwise, we wouldn't be here today. The reality is that there wasn't a need for them to really put customers first because like customers had nowhere to go. But that type of relationship in which customers are almost like held hostages to your services because they don't have an alternative, they don't end well, right? Like the first real option that will show up, they're gonna jump, and that's a little bit of what has happened since then.
Yeah, I remember seeing this is a couple of years ago, so it's probably changed a little bit, but I think Brazil had one of the highest interest rate spreads. So that's essentially profits for a bank in the world. And then also it was the highest return on equity of any for banks of any country in the world, which is, essentially profitability. Like if you're getting high returns on your equity, it means you have a good business, a high margin business. So
For sure. Like when you look at the spreads, like you can debate that because there's a high spread, but there are lots of costs that aren't counted. When you calculate that spread related to inefficiencies, to labor costs, to fraud rates, like to taxes, to a bunch of like things that are going to eat away like that spread. But the ROEs, to your point, like they're hard to dispute, right? Like the reality is this has been historically a pretty good business. And that's built largely on customers not having a real choice. Related to that, now we're seeing the industry ROEs being compressed through, competition eating away a lot of those margins and them having to, frankly, try harder to acquire and keep customers.
yeah. So you said you had a lot of learnings pre-Nubank working at some of these bigger incumbent banks. What were some of the lessons that you learned?
Again, I don't want to sound, excessively negative about the competition. I think it's very hard to be in the position that they're at. No one wakes up every day and goes to work and say, "Oh, okay, I'm gonna treat customers horribly today, and I'm gonna sell horrible products." Like nobody does that. Nobody wants that. But the reality is that their lives or their companies are full of organizational barriers, of legacy technology, of like a lot of things that get in the way of serving customers much better. A lot of the learnings come from just simplifying everything, making sure that your processes, your organizations are lean, they're agile, they're fast. It's always zero basing your thinking in terms of the friction that you're creating, the processes that you're creating, so that you don't let things grow and come back and overwhelm you and bleed into the customer experience that you're seeing, right? The other thing is just for us being able to start from scratch from a technology standpoint, not having to deal with legacy platforms and things that have been over decades connecting a bunch of like acquired companies through M&As that were, potentially poorly connected. That's a huge advantage, that translates not only in a customer experience advantage, but also in a cost advantage. So there's a lot to learn in terms of how to do things differently. especially from the beginning. When you can start like in the right way, I think that takes it a long way. But on top of that, I would say one of the things that we were more intentional about, that we spent a lot of time on, was making sure that we had the right culture. Like we invested a ton in that, in what we wanted to stand for, what we wanted everyone in Nubank to live by, like the values and the purpose of the company. So I think that that's a pretty powerful North Star for everyone that works here, to make sure that they're, making good choices and doing the right thing every day.
Yeah. You mentioned starting from scratch. I'm interested, the story starting Nubank. How did you come up with the idea? How did those first couple months go, getting everything started?
I had resigned from my job at this incumbent bank, determined not to do financial services anymore. I was like, I'm done, because I was just so tainted. I was like, well, these guys are supposed to be the best out there. And if my experience was that miserable here, can you imagine going somewhere else? So I was like, I'm good. I'm going to do something else, And I wasn't even going to start a company. But when I met David, so he was coming from the venture capital industry, right? So he had spent the past 2 years working for Sequoia Capital in Latin America, trying to scout companies to invest on, and try to find someone that was building something truly original. And this was 2012, early 2013. And it was like, well, there's nothing really here, because the ecosystem here was mostly like, some people trying to copycat, what was happening in Europe, what was happening in the US, but not really tackling like the big problems, not really building companies that had the potential to really be transformational. And he was kind of scratching his head, especially why not tackling the financial services opportunity? Why? Like, why are we seeing so much disruption, so much innovation coming from other industries, but just not here? And he decided to leave Sequoia and go do that. And we met through a mutual acquaintance, and he was looking for someone. So David isn't Brazilian; he's Colombian, but he had been in the US for a very long time. He was looking for someone that was local, that knew the industry, knew from within, had management experience, had operating experience, and that's when we met. I was like, well, but I was determined to do something else. But
yeah, what convinced you?
It was just such a great opportunity to prove a lot of people wrong. I couldn't pass on that. So I remember thinking, well, if there's someone in this country that could actually execute on this, it would be me. So at the moment, I had a few other offers, and this was by far the less compelling one from a financial standpoint. Like, we put money out of our pocket. It took a while before I could even get a salary coming out of this. But it was just such a big opportunity. I couldn't pass on this.
You mentioned, I think it was in another interview, you said it took 6 months to go from incorporating, getting the bank account set up, getting the money wired into Brazil to be able to pay yourself and, start operating the company. Why did that take so long? That's another really broken problem, it feels like.
Yeah, not even pay myself, pay the first employees, right? Like, pay myself it took a little longer. We bootstrapped our beginning for sure, with our seed money and a lot of our like pocket money. The reality is, like, Brazil and Latin, I wouldn't stipulate that it's different in other Latin American countries, but it's a really hard environment. There's a lot of bureaucracy. Like, for you to even set up a company, incorporate a company, takes a while. But that was, as hard as that wasn't even the biggest hurdle. I think the biggest hurdle was opening the bank account and getting the money into the country, because there's just a lot of paperwork. The vast majority of banks wouldn't even open an account for a company as young as that. Like, you would need to be 2 years old to even be able to open an account, which begs the question, how do you get to be 2 years old if you can't get a bank account before? So lots of chicken and eggs that we found along the way. Luckily, we're now in the position to solve for that. Nubank has already become the largest SMEs retail bank, so to speak, in Brazil. We have over 3 million SMEs accounts today here at Nubank, and we make it extremely easy for them to open an account. So that problem for now, for people starting out like we did, we're helping them.
Quick plug for the Nubank product. Well, I guess so level setting then, what was the very, very first product that you kind of launched and went to market with?
Yeah, the first product was a credit card, like an international MasterCard branded credit card consumers. So we started there. There were many advantages to starting with a credit card. One of them was on the regulatory side. So we didn't need any type of financial license back then. Like today, if you were to launch a credit card, you would need, but this was 10 plus years ago. So we didn't need a specific license from the Brazilian Central Bank to do so. But that was a good argument for that, but it wasn't even the main one. I think one of the main ones is first, credit card is a very fast cycle product in the sense that very quickly you can learn from customer behaviors. You can see spending, you can see payment behavior. You can get a lot of data from those early cycles in credit cards. And also it allows you to build trust and to build a brand in a way that is more consistent and efficient, I guess. Because if you think about the deposit side or savings, like that's a route that many fintechs in Europe, I guess, took, opening an account with a debit card. That requires a lot of trust because, customers, they need to trust you.
Will it be there? Yeah. When they need it, can they get it out?
In a position of a credit card where we're the ones trusting customers, right? Like we're the ones that got the credit risk if they don't pay us. That's a faster way for you to build trust and to build a brand. So that was very important.
And then I think because you came from the incumbent side, you were used to spending a lot of money on marketing to acquire customers. But it sounds like, at least from what I've seen and heard, it was actually the opposite for you. Why was it so much easier for you guys, and why was it so much different from your prior experience?
Yeah, that was very surprising. Like this was unheard of, really. Like, in the world, for somebody to grow a financial services business with very little, negligible, zero customer acquisition cost. So I told David many times, I was like, we got to be prepared to make big marketing investments because people, they hate banks. They hate credit cards. Like, how are we going to do that? The industry has been historically really a push industry. You needed to make a ton of effort. But what we realized was people were just ready, for an alternative. Historically, they had been pushed these bad products so hard that, the minute that something good actually showed up, they just flocked to it, What we got wrong was like, we didn't realize people were just so ready for this, like that having a much better product would be that much more efficient in terms of customer acquisition.
Yeah, and I think I saw you spent a total of about $1 million to launch the very first card and get it all scaled up. That's pretty impressive, especially considering there was not a lot of infrastructure. How did you pull that off? Was it just that you didn't have to spend anything on marketing?
Certainly zero on marketing, right? Like it was less than $1 million until we had our, like we had the first version of our app. We were issuing the first credit cards. We had a team, I want to say about 10 or 12 people back then, all engineers and one designer, me and my other two co-founders. And that was it. That was the team. I think it was a combination of multiple things. First, we were really scrappy. Like our first office was like this little house, and one of my co-founders, like he lived upstairs for the better part of a year because he had just gotten to Brazil. He had no home, no family, no nothing. So he just worked all the time, like we all did. We were just so like we made every penny count, really, and focused all that towards paying, engineers and the little stuff that we needed to get that off the ground. And we were just really thoughtful about how to build that business and how to maximize our runway, because we really, there was just so much uncertainty. We didn't know if customers were going to care. We didn't know if there's going to be money for a Series A, if regulators were going to pull our plug. Like we had there was just so much uncertainty, so much risk. And one of the things that we wanted to do was de-risk a little bit on the type of runway that we could afford, So we were really mindful of that.
Yeah, I think you launched beginning of April 2014. That was the first transaction that I saw. Do you remember what it was?
Yeah, it was April 1st. We were very excited because we had gone live and we're like, okay, let's, go and use the card. And we went to this place, like think about like a diner, coffee shop type of situation, but very simple, like very simple place. And it was, about a block away from the little house where we were camped, I guess. And we're there, like just buying a snack or something, like just to see if the card would go through. And embarrassingly enough, the first attempt with the Vits card didn't go through. The second attempt with my card didn't go through. Only the third attempt was one of the engineer's card went through, and that was enough, like, for us to celebrate that day. Like, it was very important. It was one of those stories, like, of companies they're just really scrappy, that had very humble beginnings. It gave us such a sense of accomplishment because we were just so tiny and such a team of contrarians, like, trying to accomplish this huge thing, compete in this like gigantic industry. It was just such a special moment for sure.
It's almost like proving people wrong. Like, hey, you can actually do this.
Yeah. Well, it took a while for us to start proving people wrong, but that was a good first step, like going live.
Yeah, I mean, it's almost like I can't even imagine those, couple minutes between trying all the cards and you're like, oh shit.
Oh, we have it on video. Don't worry.
Oh, do you really?
We do. It's in Portuguese though, but you can understand. You can feel the desperation.
So what you're seeing if you're watching video is in the convenience store, very first transaction.
Sorria. Tirando fotos também, cara.
Vai, Margarine.
Atenção, peraí. Porra, não autorizada.
First one did not go through.
You don't have limit. Hold on.
Or did Lucas fix it already?
No, I don't have a problem.
Doing the second one now.
I just cannot get into the app. It's supposed to go through. Não autorizada.
Vai.
So much is
Man.
actually CS lights.
Didn't work. Doing the third one now.
This one's online.
Hey!
There we go. They got it. You've said something publicly a couple times that I thought was really interesting. Just raising and signing the Series A was a big hurdle, not only because you were kind of creating this category, new market, you were starting a family at the exact same time. What was that experience like, getting that Series A done?
As I mentioned, like, we were really scrappy, like, with our seed money. We were really like, we have always been extremely respectful of our investors' money. I think over the past 10 years, we've seen a lot of startups, I don't want to name it, but that didn't take that seriously. And we didn't want to be one of them. Like, we were always so mindful. Till this day, like, we're so thoughtful about what feels like excess, what feels like waste. It was such a big deal for us to have a product, to have something live, to have a team, to have the first few thousand customers, which we had by then, by a Series A. So it was truly, an accomplishment to raise our first round, and it's Sequoia led that round. And as you mentioned, I was pregnant. So I flew to California with David. I was about 7 months pregnant, I believe, on the Series A pitch. It was something to pitch, but it was also, like, it's life happening. And I wanted to have a family, and I got pregnant very, very early on. And I love my daughter to death. I say that she's Nubank's twin because she was born the month that we launched the company, because we were in stealth mode, right? Like, until we had the first few thousand customers, like, we were really under the radar. But I signed the Series A papers at the hospital the day after she was born, and we launched the company that month because we couldn't be stealth anymore after raising around with Sequoia. It was very challenging, but you know what? Like, I have 3 daughters now. They all were born in challenging moments. Bella, my second daughter, was born the year that we launched Mexico. So I was also, like, very pregnant in Mexico, like, talking to customers and figuring out what we were gonna do there. And then Anna, my third daughter, she was born shortly after the IPO. If you've seen any of the IPO photos or footage, you're going to see me 8 months pregnant at NICE, ringing the bell with my daughters in tow, including the one I was pregnant with. So it's just life happening.
When I started my fund, Banana Capital, my second daughter was a couple months old, and it was not a good time, all things considered, but it was just kind of, it's life. You got to do it, and wouldn't trade it for anything. It's been a lot of fun. So then you've got this series. How big was the Series A?
It was small. Like, I see these companies raising like 100 million shares. I'm like, what? I think ours was like 10 or 15 maybe, like, but it wasn't more than that. It was something like that. Yeah.
So you had, we'll say 10 to 50 million in the bank on the balance sheet. What did you do next? Like, what did the roadmap kind of look like? What were some of the key decisions that you made?
Yeah, at that moment, what we needed, like we had a product live, like it was an MVP type of product, but it was live, so it was all about growth. And again, not the traditional type of growth that you buy, right? Like we continue to do very little, if any. Like I don't think we did any marketing after Series A. We continue to rely on lots of like member get member type of situation, like word of mouth flowing and.
Like referral rewards or?
No, we never incentivize reward. Like it was never a hard incentive. Like people are just so amazed by, or the experience that they would just spontaneously tell their friends and family to come. So we wanted to be ready for that growth. And in credit cards, in some other products too, but especially in credit cards, like growth costs you. Not necessarily marketing, but you got to pay to buy bureau data. You got to pay to issue the card. You got to pay the shipping fee for the card. Like you got to pay a lot of, like there's a lot of upfront cost. So I would say a lot of that money went to fund growth, but the cost of growth, not necessarily marketing, and also to fund our team's expansion, right? So being able to hire more people, more engineers to continue to improve the product and to continue to scale. That was mostly the focus.
And then at what point did you add kind of the second big product beyond just credit cards? Or was it market expansion that you kind of did next?
So one of the things that philosophically we also differ from other startups is there's a lot of companies, and this is not a judgment, it's just like very different strategy. There are lots of companies out there, they're just going to launch a bunch of products, they're going to launch a bunch of countries, and they're going to throw a lot of spaghetti on the wall and see what sticks, right? Like it doesn't work out, they'll just shut down, they'll move on to the next thing. And so like we didn't want to do that. We wanted to earn our right into doing the next thing. So we actually only did credit cards in Brazil for many years, for, I don't know, maybe 4 or 5 years, until we felt that we had earned the right to do the next thing, which was a savings account. And then we worked really hard to be able to launch that. And then we earned the right to do the next thing, which was the debit card attached to the savings account and so on. And that has been our thinking. Like we don't want to do too many things that jeopardize like the customer experience, the bar that we hold to ourselves, in terms of how customers feel. We also want to make sure that we're thoughtful about the process. Like we want to do fewer things, but do them really well, And the same thing happened about international expansion. We didn't want to rush into doing country number 2 or 3 or 4 or 5. Like we've only done 2 and we're good for now because we want to see them doing really, 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 really well, and they're doing really well. But we want to make sure that we're well grounded before we take on the next thing. And there's so much going on, like Mexico, Colombia, like the next products, and in Brazil still, like there's so much more to grow and to build that let's take one step at a time.
So today, what is kind of the product suite? Is it kind of your typical bank, or how do you kind of think through the current offerings?
So we wanted to cover our bases as quickly as we could, responsibly. Again, like making sure that the experience was held to a high bar. Let's take Brazil, for instance. So in Brazil, currently we have an account that is similar to what you would have somewhere else. We have investment products, including fixed income products. We have equities trading, ETFs and so on, investment funds. We have personal loans. We have secured loans. We have credit cards, of course. We have SME accounts. We have credit cards for SMEs. We have some insurance products. So we've been expanding our product portfolio. And Brazil, of course, is the country that we have the wider product portfolio at this stage. But we don't yet have mortgages, for instance, or auto loans, right? Or some other more sophisticated insurance products, right? So we don't yet have everything that a bank would have. Investment banking, wholesale banking, right? Like, a lot of things that they would do. And I don't know if we're ever going to have, because I think part of staying lean and agile and simple is choosing where you want to play and how. We're also very thoughtful about which verticals do we believe we are well positioned to compete, because we see ourselves as having a significant cost advantage to everyone else, right? So we have a meaningful customer acquisition cost advantage for everything that I said. So we acquire customers at a fraction of what everyone else does. So that's one. At this stage, we have a cost of funding almost advantage because we have a very large deposit base and, comparable market rates in terms of cost of funding. We have a lower cost of risk because our models in Brazil, they have been evolving very quickly. Our proprietary models, they're very sophisticated and they allow us to play at different income brackets at scale with lower delinquency rates than you would see at the market. And we have much lower costs to serve customers because of, how simple our processes are, because of how little bureaucracy we have, because how much more efficient our tech platforms are and everything else. So we want to make sure that we're thoughtful about our advantages coming into different verticals or even different countries.
Yeah, there's a lot of follow-on questions to everything you just said. Any ways that the pandemic really impacted the business? I mean, we're kind of almost 4 years in at this point, but were there any big changes or events related to that?
Yeah, I think the pandemic was a big catalyzer that accelerated a lot of the trends that we're already seeing. Let me explain what I mean. So before the pandemic, nobody liked going to a bank branch, and sitting and standing there in a line, like to make a payment or to figure something out. So that was very inconvenient. But when the pandemic hit, that was not only inconvenient, but it was also unsafe.
Yeah, you couldn't do it.
It was unsafe and frankly, like, impossible sometimes, right? Because, many branches were closed. So people just had to figure out a different way to do things. They had to go digital if they hadn't already. So I think it really accelerated the pace at which technology adoption was happening, for digital banking. And that certainly, helped us in some ways. Growth really accelerated during that period. I think people just got more open-minded, about testing something different. That's one very clear, tangible impact that we've seen in that period, for sure.
Yeah. And then you went public in 2021, I think I'm remembering right. What was the thinking on going public and what was that process? Like Brazilian company, but you're operating in Latin America, going public in the US. Can you just kind of take us inside?
Sure. So our investor base had always been an international one, right? So our investors from the VC side were all the international funds, right? I've named a few. DSC, Tiger, Founders Fund, Sequoia, of course, has always been a big partner. And so all those guys. So our investor base was always like that. So for us was natural. The type of capital that we're accessing was already international capital. It didn't make sense for us to list locally, period, right? So that was one. Secondly, we always knew that, being a publicly traded company was in our future because we weren't going to sell the company, So at some point, we got to give liquidity to people. There wasn't much of a choice. It wasn't a question of if, it was a question of when. And the reality is that 2021 was a very interesting year for that. A lot of stars aligned in terms of how the capital markets were operating, in terms of how the local, how the Brazil operation was doing, how the Mexico operation was doing, how the political risk in Latin America was being perceived. So there was a lot to a lot of stars aligned for us. And we're very happy that we did, because if you think about it, we went through the hardship of 2022 extremely well capitalized, when a lot of companies that hadn't raised capital had to do either severe down rounds or, frankly, die. So we were very, part of it is merit, but a lot of it's just we were very lucky about the timing, So we're very happy that we did that. Having said that, if there was a way to stay private for longer, it would have been amazing, or forever. There are the occasional costs of becoming a public company, but being financial services, for instance, a lot of people talk about the reporting obligations and, opening up your numbers and your books. As a financial institution, we kind of already have to do that, in a lot of ways. So I guess that was less of a cost for us in some ways.
When you talk about just cost of deposits or funding, or I think generally as a publicly traded company, you generally reduce your cost of equity. Generally speaking, you can access the capital markets, whether it's debt or equity or whatever. It's generally a little bit lower. So again, good to have that going into 2022. Has the approach at Nubank changed at all over the last couple of years, just with kind of dramatic changes in interest rates?
Not really. the reality, like not about the interest rates themselves, right? Like there are second order implications of that. So we did see on the macro environment, changes here and there. So you saw like some, delinquency rates go up, like because of like a worse macro here and there. Like, but the reality is like we've been at this for a while now, like, 10 plus years in a country, Brazil, that has historically have very high interest rates.
That's fair, yeah.
Right? Like in very tough macroeconomic environment. So we don't really know what reality looks like for like a smooth macroeconomic environment.
I guess we're almost spoiled in the US where it's usually all really easy and then every once in a while.
Up and to the right is the exception, not the rule here.
You mentioned a little bit about brand. I'm super curious, how did you come up with and decide Nubank's brand identity and why is it so important?
Oh, it's so important. And one of the things that I'm very happy about our story is that I never had to sell David, who's our CEO, or my other co-founder, Ed, on the importance of building a brand. Like they knew from the beginning that we needed to build a powerful brand, a strong consumer brand, a brand that people would be emotionally connected to. Because we talked a lot and we're very intentional about our culture. And our number one value is we want our customers to love us fanatically. That's the brand that we wanted to create. Like that's our number one value. That's our strategy ultimately. And we wanted to build a brand that would translate that to customers. We believe that the brand is the way that the culture materializes to customers. So we wanted it to live up to the values that we lived inside and to be a transparent way through which customers would see us for who we were. And that's where Nu came from, because Nu in Portuguese means naked. We wanted to be really transparent to customers, really let go of all the complexity, of all the smoke mirrors, the lack of transparency, of all the complexity that really stands between customers and them understanding their money, their finances, and having the control of their lives, of their financial lives. So that's where the name came from. We also have a very unique visual identity. We chose purple, which was something unthinkable for a financial institution back then.
Bold color.
It was a bold choice, We got teased for it, for sure. But we wanted something that stood out. We wanted something that was a statement, love it or hate it, but people wouldn't be, numb to it or indifferent to it. And it was a great choice because it really stood out. It really did help people to identify and frankly, like, it was so unique, so original that it helped again to build this aura of new and cool and something that people wanted to be a part of. So lots of thoughts were put into that, and I believe we made some pretty good choices.
So I've heard you mention before, Nubank was almost shut down by regulatory stuff at some point, or you ran into like a regulatory roadblock that was like an existential threat. Can you unpack that a little bit? Because that is very interesting.
Absolutely. So it's important to say that it wasn't like regulators wanted to shut us down because we were doing something wrong. It was not of that. Like quite the opposite. Like we have always been so thoughtful about the way that we've embraced really like regulation and being compliant. Like we wanted to be A+ students in that, in that sense. So it was nothing like that. It was a moment a few years ago that, of course, because it was going through a financial crisis like the country, the executive branch was thinking about what different measures they could take to stimulate the economy. And at some point, somebody was like, well, we might do something to reduce the settlement dates to have better working capital for retailers, to fund consumption. But that was just such shallow thought, because that had such severe implications for the whole chain. That is that this credit cards are an extremely complex industry. If you think about consumers, credit card issuers, merchants that are accepting payments, and acquirers, and the networks, like there's so many implications of that. And one of the implications was if they were to make that change, not only the bank, but everyone in the sector would need to raise capital and funding overnight in the order of billions. So it was just something unthinkable. That was the existential threat. And we got a hold of this very early, thankfully. And we just started working like crazy. Like we just started articulating with the central bank and the policymakers and people in the executive branch, and just having conversations with them about, like, do you really understand what you're talking about? Like, do you understand the implications? Like, you're going to shoot yourself in the foot because you're going to handicap the industry that's actually making consumption viable, giving customers working capital, for them to consume. So there were lots of implications. It was a tough moment for sure. Luckily we were able to convince them that this was not a good idea, and this hasn't been revisited since then, because it's really something really tricky to touch. But it was tough. It was one of the biggest challenges that we've lived through in these 10 years.
So was it essentially you just need a certain amount of reserves if you're doing something in credit?
Yeah, it's not even reserves. So the way that it works in Brazil is customers will pay or like their credit card bills on average 27 days after they've made the purchase. Issuers pay acquirers about 28 days after the purchase, and then acquirers pay merchants 2 days, meaning they get the money in 30 days. So if they were to change, the change that they wanted to make was for the merchants to get paid in 2 days, meaning the whole credit card industry would have to have funding, not capital, but funding, like that funding to anticipate those funds to merchants much sooner than they would get paid by customers. And that was just money that did not exist anywhere in the system. So immediately we would have to cut access to credit cards, like immediately, because no one would be able to fund that.
And that was the whole business. That's scary. One other really big question I had was, as Nubank has evolved, new markets, new categories, how have you evolved the org structure going from fairly simple product, probably relatively, you're in a team in a house. Now you're a multinational, global, publicly traded company. How have you evolved and changed the org structure over time?
We have always thought that the structure should serve the company and our customers rather than us being like serving some market. So we were always flexible. Like the team and the structure has changed quite a bit over the years. I don't think a year has gone by without like a major change that we've made to adapt to whatever reality we're facing, whatever priorities we have. So the way that we think about this is the structure should adapt to the business goals and the priorities that the company has. So we recently made a major change to be able to potentialize the impact that we can have on our international expansion. So we recently created global products teams and global platform teams to be able to, and then we separated an actual Brazil team, which didn't exist. It was all just one team for us to be able to, as we call internally, platform minds a lot of the things that we're doing for Brazil so that Mexico and Colombia can move much faster. So that's a recent change that we just did. And that has really enabled us to accomplish more with less and faster and better, But we're always thinking about what else can we do? Like how differently can we, set up the teams to be able to be more efficient? So it's something very, very much alive. And that has evolved quite a bit.
Yeah. And speaking of the team, I noticed that all 3 co-founders are still involved with business. Yeah. Contrary to maybe what someone might think, that is very, very rare. How did you manage that? I mean, what's the story there?
Of course, like there's a big component on all of us just getting along, right? Like nobody fought, like nobody hates each other, which is a good thing. And we see a lot of those stories. I think all 3 of us being very committed to doing whatever was right for the company, and also being very complementary to each other. So it's a very different skill set when you think about it, like what the 3 of us brought to the table. All of us being flexible in terms of the different type of roles that we've taken over the years, whatever the company needed us to do. But it is something very unique and something that we're proud of for sure.
Yeah. How did you change as a leader or executive as the company scaled over time? Any big surprises or things that worked really well for you?
I have, of course, grown. Like it's been 10 years. So I'm definitely, my hope was like much better today than I was when I first started, right? Managing a few thousand people today versus no one when we first began, really. There's a lot of learning and growth from that. But I think what has helped me through was precisely this thinking that I was talking about before. I think of my role as someone that does whatever the company needs me to do. And sometimes people will say, oh, but who do you answer to? I'm like, to whoever is asking, like whoever asks, I'll be answering. As long as you keep that type of flexibility, you stay open-minded and you're willing to grow and to learn, it should be fine. I think you got to watch out for blind spots, because when things go well, the company grows exponentially, but people usually grow linearly. So you got to be thoughtful about that. Sometimes the scope somebody has grown so much, and as much as they're growing as leaders, they might not grow at the same pace. So you might need, to adjust to be able to continue moving, as fast as you can. So yeah, it's something to watch out for sure.
Yeah, definitely something to watch out for. Well, this has been an awesome conversation. Thank you so much for coming on the show.
My pleasure, Turner. This has been a great conversation. I hope this was useful for your audience, and maybe we can do this again some other time and cover some more topics.
So what do you think? Should we have Chris back for part 2? Let me know. If you don't want to miss future episodes, subscribe to the newsletter, The Split, in the show notes. If you want to support the show, the best ways are to leave a review wherever you're listening, like, comment, subscribe, follow, retweet, and share with a friend who lives in Brazil, Colombia, or Mexico that's still paying high fees on their credit card. Thank you to Chris for coming on, and to you for tuning in. See you next time.